Hi, and welcome back to Hedge Fund Manager. I'm Karl-Mikael Siding. So let's take a look at my final thoughts regarding Meta in this deep dive. So Meta's price, it first plunged from 741 to 480, and after that it has bounced back to $546. So that's 27% down from the ultimate peak. You could say it's a bit of a sale, but it's definitely not a crash. This is just a garden variety correction, nothing really important happening, except for the fact that they are now below their 200-day moving average. So it might look a little bit dramatic, but it's not the type of crash that makes you want to go in and buy with both hands, as I like to call it. The question is, of course, is Meta cheap enough to start buying it here, just a quarter down from their peak? So I've included here the numbers from FinViz. You really should, if you do this absolutely seriously, make your own double check in their official numbers, but usually these numbers work good enough. Their price earnings last 12 months, as I've pointed out a couple of times, is 23 times, and next year's price earnings is about 19.5, and the market is actually only expecting a 13% EPS growth next year. So that would be not very far actually from the warranted market multiple. And this company is so far from average and from the market as can be. Meta is far better. Meta has shown a growth rate of 30% per year for 5 years, versus just 8% over the long run for Standard & Poor 500 companies. So that's almost 4 times as good, and 22 percentage points per year better. That means a relative doubling in EPS every 3 years, and that should warrant easily at least 2 times the market multiple. So at least 33 times EPS, if you could expect them to keep going like this, and those are 2 ifs. Meta also has a really nice return on equity of 37%, where 15% would be really good for most companies. And it has a gross margin of 82%. I mean, this is an internet software company. And the net profit margin of 38% is also really, really good compared to the average company in Standard & Poor 500, which currently is about 9-10%, and historically about 7%. And then remember, Meta has a 38% net margin. So something is not quite right with this picture, and I can't really find any clues to the pessimism in the actual data. Here, for example, we can see the 10-year revenue chart quarter-wise. There's nothing in there that says there is trouble brewing. Same goes for EPS numbers, except maybe that you can see that sometimes Meta takes a bit of a hit, and it can be a hit for quite a few quarters, and that of course spooks the market at the time, because you don't know how long the trough will or the downturn will last. But as we can see, and this is what I base my positive view on Meta on, is that they always come back, and that is because they have such a strong market position and 3 billion plus users that they can activate in many ways. And I actually also think that sooner or later they will make their name Meta proud in terms of going into the metaverse. But up until then, this is an AI, social, and advertising company, which is will be cyclical even going forward, and we're probably facing a recession due to the trade wars. And I mean, the economy is a sensitive organism, and if you start doing ham-fisted stuff and big changes like the current administration in the US, you are likely to break a few eggs on the way maybe to better times. So in summary, what can explain the low multiples? Well, first and foremost, I would say that a recession is looming, and Facebook is an advertising company. So they are likely to lose ad buyers in a downturn. And even if Meta can grow by 15 to 20% per year on average for the coming years, and that would warrant at least a 23 times multiple, the experiences that we've already had back here in 2020 and 2022, they point to a strong cyclicality for their earnings. And once we get to falling earnings, the market is bound to punish that with lower prices. We also remember that the share price, the last time round in 2022, the share price crashed from 400 to 100. Then, of course, at 100, I thought it was a no-brainer to buy it. I mean, you still would get this global dominant advertising and AI company at about 10 times earnings. But it would certainly be amazing if we could see Facebook all the way down there to 100 again, but I wouldn't bet on it. I think that if we see that type of a market crash and a Meta crash, about then, let's say this fall, we will see huge stimulus efforts from the US government, and that would propel stocks like this upward again. But just looking at the chart here, I think that maybe 400 seems like a level that we could likely aim for after breaking through the 200 moving day average, establishing a bit of a negative trend, and also uncertainty about their at least near-term profit level. We could chart-wise pretty easily get to about 400, so I would set a price alarm somewhere there, maybe 415, and then also $300 is definitely not out of the question, although I would think that it really is a no-brainer to buy Meta. Sure, it could always go even lower, that's how these things go, but for us it's more about a risk-reward combination, and you'll never know when the stimulus comes and everybody is trying to chase the stock, and you're bound to miss it if you do. So start nibbling at 400 and 300, and should it go even below 300, I would definitely buy with both hands. Final thoughts in a minute or so is that you should focus on microeconomics, the company itself, not the macro or TA. However, at this point, the potential headwinds are so strong that there is no reason to rush in or get fear of missing out. However, the current administration is very erratic, and despite causing long-lasting damage, you never know when the stimulus taps are open full on, and the Fed starts pumping money. Although I don't think that will happen until we see more panic. So what I would say in this deep dive of Meta is to just add Meta to your list of your wish list, your watch list of stocks to buy at really good levels, and keep and rank this list. Keep it updated and create price alarms so you know when to buy and what to buy and in what order. Meta definitely needs some more work for added certainty, but I also think that we probably are not competent enough to actually go into that much detail that we can add much value. So rather, I would advocate for keeping a large margin of safety.